Today, we're going to provide an outsider's view of what is likely not going to change regardless of who is elected this November. We're also going to discuss the $9 trillion spending gap that will need to be filled over the next decade in Europe, and much, much more. Joining us on the show today is Sheridan Takushi. He's a geopolitical strategist and macroeconomist located in Switzerland. You can find out more about him or subscribe to his newsletter at geopoliticalresearch.com. So, Sheridan, there's been a lot of focus about the U.S. elections. Of course, we do see a major U.S. election coming up here in November between Trump and Harris. A lot of passion and, people having very strong opinions about which way the country is going to turn, either left or right, and believing that this is a major hinge point in terms of where the country is headed, at least for the next 4 years, but perhaps more. You're located in Switzerland, and you've been providing a different view from the outside on the election landscape and what will change and what won't change. From your perspective, tell us what you think doesn't really matter in terms of who is elected this November.
Thank you for asking me this question. I think there are some things that for Americans is very important, right? I understand for Americans it's critical whether Harris or Mr. Trump are elected. For most issues, it makes a big difference, although not on all. For Americans, I believe it doesn't really matter whether Harris or Trump get elected. The situation of the budget deficit is going to get rather worse. Maybe on one candidate a lot more than with the other, but the budget situation, the fiscal deficit is something that is concerning with both parties. And for international investors, for international companies, for people outside of the US, I believe the situation is quite different. And for several parts of the world, it will not matter so much who wins in November. And if you take the case of Europe, where there are many investors, it is quite remarkable. It doesn't really matter who wins because both parties are in such a gridlock. There's so much division in Washington that no matter who wins the elections, there's going to be obstruction coming from the other side. The obstruction is going to make it very difficult in Congress, whether it's the House or the Senate, but it's also in the judiciary system, the court system. It's very clear that obstruction in the United States is going to be a big issue for whoever wins. And in that sense, we see a trend getting even stronger. The trend that US administrations are having to use foreign policy to define their term. And we see this trend over the past 14, 15 years increasing, especially the last 15 years, that increasingly US administrations, whether blue or red, are having to be more assertive in their foreign policy to win elections, but also to define their presidency. And this is actually what I think is particularly difficult for Europe. Let's say President Trump wins. People here will be scared to think President Trump wins. Maybe President Putin will think that he has a free hand. He can probably be more aggressive on Europe. And if Mrs. Harris wins, the Democrats win, I will also say there is a very high likelihood of a confrontation between NATO and Russia. And I think that the biggest loser of that confrontation, the biggest or the first victim is going to be Europe as well. So whether Harris or Trump win, Europe doesn't look very good.
On top of that, too, I mean, if you think about U.S. and China relations, those are going to be deteriorating, I think, regardless of who is in office as well. Perhaps they may deteriorate a little bit further or stronger under Trump, since he has said that he would be taking a much stronger stance on tariffs against China, reviving some of the trade wars that we saw. Of course, we did see a lot of that under Biden as well, and perhaps accelerated, but this is very much a bipartisan structural, a geopolitical factor that is at work between these two countries. It's not necessarily a right or left issue. So that's another factor that I don't think it really necessarily matters who's going to be in office that's going to determine the long-term trajectory of U.S.-China relations.
Yes, I do agree with that. So this idea that America first is just a Republican slogan is wrong. Biden has done actually some very similar policies with President Trump. the Inflation Act, that is also very pro-America. And we have to see it. Of course, there is slight differences, as you rightly said, for instance, in the case of China, slight differences who wins. But like in the case of Europe, if President Trump wins, the security deterioration for Europe is going to be immediate. If Mrs. Harris, Vice President Harris wins the elections, the security deterioration for Europe is going to be a little bit more protracted. It's going to take a few years probably for that to happen.
Yeah. So as you said, and I think the other thing too is that under both candidates, it's widely expected that we're going to see fiscal deficits continue to expand and get worse. There's no expectation that we're going to see either Trump or Harris try to pull back on U.S. spending, because this is, again, a structural macro issue that we're dealing with when it comes to spending more than we're taking in revenues. A huge part of that has to do with the deteriorating demographic situation. There's also other structural factors that are at play here that don't necessarily pertain to one party or another. Of course, there has been I would say, the embrace of modern monetary theory as somewhat as the de facto now policy ever since COVID, with printing money at levels that we typically see within the context of a major economic recession or financial emergency. And now we're just continuing the spending. So there's a number of things here that are at work, again, which don't have to do necessarily with Republican or Democrat. They're structural in nature. And this is important because you want to understand these things critically if you are a long-term investor. And you've been talking on your website about, again, taking more of an external outsider point of view here, pointing out that, you believe the biggest threats to the U.S., they're not foreign, they're not necessarily Russia or China, but they are homemade. And you've been really drawing attention to, again, the policies that have been in place.
Yes, since the year 1974, the United States and tandem Europe have embarked on a very expansionary fiscal monetary policy mix. And it is now 49 years into this fiscal monetary expansion. What does it mean? Well, it means that we are stimulating the economy. If we have a problem, we stimulate. If we have a crisis, we stimulate. If we're going into recession, we stimulate. If we got a pandemic, we stimulate. So we are going from stimulation to stimulation. We have an overstimulated economy in the United States and Europe. That means that the excessive money, the excess liquidity has driven all asset prices higher. So there is a lot of inflation. And it is, of course, if you're not a macroeconomist, you look for inflation only in consumer goods. But if you're a macroeconomist, you look for inflation in a much broader view. US stocks are inflated. US bond market is inflated. The US real estate is inflated. Everything is inflated. And the same goes here in Europe. Everything is inflated. Even the price of a submarine is inflated. The price of an aircraft carrier, everything is inflated. And of course, we think that inflation of stock prices is a great thing. I don't. Because once everything is inflated, inflation is not such a great thing. The problem with inflation is it creates a wealth illusion. So you have now a problem. 2 generations of Americans have become used to never having a recession and to seeing the prices of things going up, right? On the other hand, you see the reality that a highly stimulated economy with a hyper-expansionary fiscal monetary mix has created a much more fragile financial system, a very fragile financial system. That is exactly the risk for America. Our enemies know this. Our enemies are ready to take advantage of this.
You said that really that these policies go back to the 1970s. What are some of the policies in particular that you're looking at that have led to this massive amount of overstimulation, as you referred to it?
I choose the year 1974 after we decided to decouple from the gold standard. You could actually go, if you take a broader view, you could actually start with the administration of President Ford, but let's not go back too far. In monetary terms, we need a cut, and that year for me is 1974, the year when the United States started a fiscal monetary expansionary process that is lasting until today. We're basically free of any straitjacket, free of any monetary discipline. Because of that, we could spend money as we wanted, live beyond our means. And if we spent more than what we got in the government, we just printed more money or issue more debt. So we have this spiral of printing money, issuing more debt, and overspending. This is something that we have since 1974. And this, in my opinion, has become is becoming the number one US domestic threat to national security.
Yeah, it was in 1971, of course, when Nixon decoupled from gold. And that was a very momentous event, of course, because prior to then, the dollar had been linked to gold. And so if other nations, our trading partners, had accumulated an excess of dollars, they could trade that with gold. That ended once, again, Nixon closed the gold window. But like you said, there was a significant turning point at 1974, 3 years after that point. And if you look at federal deficits as a percent of GDP, they began to grow pretty steeply just around 1974. And they just continued to deteriorate aside from perhaps a minor period of time in the late 90s where we actually did move to a surplus for a few years before moving back into steep deficits. And then since then, in major deficit territory, when you look at federal spending as a percent of GDP since then. And again, as I said earlier, now we're seeing near records, or at least almost like World War II level types of spending, or 2008 types of spending today, even though we're not in a recession. So as you're pointing out, the biggest threats to the U.S. are really the domestic policies that are being pursued, especially when we think about just the amount of money printing. The U.S. economy and much of the Western world is overstimulated. And along these lines, one thing that we've discussed, because I know this ties into something that you've also been discussing on your website, is the center of economic gravity is now shifted back to Asia, with China and India and the emerging markets now comprising a larger amount of global GDP and trade than what we see in the West. And of course, as more internal trade among these countries, the BRICS nations, takes place, then that does mean, well, there's going to be less need for New York and the UK, London, to be these financial centers of capital. And so we're seeing this shift take place. Some have said that gold tracking back from the West to the East, particularly into China and India, as they are accumulating massive amounts of gold reserves, that this is part of that process of gold going to where that financial center of capital, that economic center of GDP is located globally. So very big structural factors that are taking place here. And, going back to what you were talking about when it comes to fiscal deficits, the amount of money printing that we see, the level of overstimulation in Western economies currently, you noted a very interesting fact and stat, and I want to see if we can build on this. You talk about how Europe is facing a $9 trillion gap in spending plans. Do you mind telling us a little bit about that?
So, right, what you just said, Cris, this trend in gold. I really believe that people should be observing and monitoring gold because the way it's going, gold transactions are going to increase in countries that are not highly indebted. And those countries will allow the gold price to rise much faster and earlier than countries in the West where we're highly indebted and where we will not allow gold to rise so much. So a bifurcation in price of gold. And yes, I call it the $9 trillion gap in Europe. Europe, as some of your listeners may know, has embarked on a major structural energy transition. And whether we agree with this or not, one thing that analysts can figure out is that the spending that will be needed over the next decade, the next 10 years, when you look at the amount of all the investments planned for the next decade in Europe, we are looking at a figure of roughly $8 trillion. And when you look at the commitment that the EU is given to rebuild its dismantled military, we are talking at a figure of roughly 1 trillion US dollar. They, of course, say this is not the figure they're given. They're actually giving a smaller figure, but you know what? This is the figure that politicians give. If you talk to the experts, you reach $1 trillion over 10 years. So just the energy transition and the rebuilding of the military, we're talking about 9 trillion US dollars. Europe is already highly indebted, and there is no money, especially since the UK left the EU. The EU has a big problem of funding, of money. Where will this come from? I believe there is only one place where it can come from. And EU finance ministers and EU finance officials have been discussing this behind closed doors for the past 9 years. This is not anything new to them. They knew this was coming. The only thing is that COVID has made this a little bit earlier than expected. They have found a source of money, and the only one that I also would also think it's available, it is the savings of citizens. If you look at them, if you look at private accounts, savings accounts, and private pensions, we're talking about something in excess of 9 trillion US dollars. If you add some money that is, let's say, on the margins of the system, you're talking about 10.4 trillion. Overall, all in all, 10.4 trillion US dollars. I think that one way or the other, Europe is going to have to tap on this money. There are, of course, many ways to do that. Direct way wouldn't be nice. I think the EU is going to choose rather indirect ways. They will be a little bit more democratic, but in the end, it is basically the same. They may have to start with a one-off massive wealth tax on the rich, followed by other one-off measures that actually will all tap that same pool, right? We're talking about private liquid assets. There is nothing else. And the case of Europe is more difficult than America because America has the world currency, the US dollar. Yes, emerging markets want to take less dollars. Yes, they don't want to buy as much treasuries as before, but it's still the world currency. The euro is not the world currency. So there is a huge difference between America and Europe. And I'm just pointing out that our European leaders, they will have to start tapping the private pools of money sooner or later, rather soon probably. And I personally don't think it's going to be an asset seizure. I think it's going to be probably an indirect way. There are indirect ways of tapping that money. For instance, you can say a one-off wealth tax. Nobody's going to call it a seizure. It could be called a solidarity tax. It could be called a energy transition tax, right? I think we're probably looking at measures that go in that direction. And even if the situation in Europe will call for drastic measures, I don't think the European government is going to undertake undemocratic measures like seizing their citizens' capital. I think probably what they may do is to mobilize what they may see as dormant savings to finance the energy transition, right? Promising, for instance, a certain yield or a certain return per year, but mobilizing that money, which means the money is still yours, but it's not going to be sitting on cash deposits. The money will be used or redirected to help finance Europe's energy transition. Now, this is speculation from my side as a potential solution. I'm not saying that I know Europe is going to do this, but this is just to show that the West, in particular here, Europe, is reaching an inflection point, is reaching a watershed moment where our policies of the past 49 years might not be able to, keep us going. Something else has to give.
Well, going back to your comment on taxation, When you think about the level of spending that is taking place, and let's focus in on the US just for a moment here, we've been arguing that it's very likely we are going to see an increase in taxes and that the government is going to try to raise taxes wherever it can across the spectrum. Most of that is going to be largely concentrated on the upper end consumer and on the wealthy. Like you said, it would likely take the form of a wealth tax. But interestingly enough, under modern monetary theory, as I said, that this has been somewhat of the de facto policy now here in the US and perhaps more widely in the West, generally speaking. The interesting thing about how modern monetary theory views taxation is that taxes are not necessary to fund the government, which is the more traditional way of viewing it, because government can just, as the issuer of its currency, if we're talking about the US here as the US dollar world reserve currency, that it basically can just create money as it's needed. However, where taxes fit in is that taxes are then used to quote unquote unprint money or basically remove the excess currency that has been created in the form of inflation from the economy. And so I think that that is kind of the way that we should probably look at this going forward, is that within a modern monetary theory framework, money printing is still going to be continuing, except taxes are going to be the means by which inflation will attempt to be reduced in various bubbles, and especially if those exist within wealthy consumers with their homes, with their stock portfolios, and then also redistributing that to lower and middle income. It does seem that that is the route that things are headed more long term, regardless of who's going to be in government. Again, these are more structural, systemic factors having to do with policies that go back many, many decades. So I don't think that these are going to be reversing, and this is the inevitable trajectory of that. I want to transition for a moment here, Christian. We've talked a lot about, some macro factors. And of course, you're both a macroeconomist as well as a geopolitical strategist. Let's talk about some geopolitics here for a moment, because in talking about Europe, with the fact that, like you said, there's this 9 trillion spending gap that we see there. You're also been discussing on your website how Europe's security has seen a pretty significant deterioration more recently. What is it you're looking at on that front?
Well, as you probably know, we focus on issues that consensus or investors are not paying attention to because they're focused on other things. We try to focus on underestimated issues. And one of the biggest underestimated threats to European security is the rise of Iran and also the rise of Turkey. This is very interesting. I think a lot of people used to say, "Oh, Iran is a threat," but they also view that as Israel's problem, right? It's just Israel's problem, and everyone has a little bit of a view that Israel, Iran pose a problem to one another. What they forget here is the role that Turkey is playing, and when you bring in Turkey, you actually realize, when you do analysis along those lines, that Europe is going to be impacted by most of the scenarios that are going to unfold in the next 5 to 7 years in the Middle East. We do scenario probability tracking, and what we see is that most commentators, analysts, and investors are underestimating scenarios under which Iran's new ballistic arsenal will pose a threat to Europe. Maybe even to the point that Iranian leaders may mention it or may threaten European leaders with the use of their ballistic arsenal. As a result of the US EU Iranian deal, because it was not just a US deal, but as a result of the US Iran deal that was supported by the EU in the year 2015, concessions were made to Iran, some written, some not written. And some of the concessions that were made to Iran for them to accept our terms was that we will not sabotage or interfere with the development of their ballistic missile program. Actually, we were forced to basically shield that ballistic program. De facto, the ballistic program continued shielded, if you may say so, we can say so, by the Iran deal itself. Well, that ballistic program has achieved its goal. The ballistic missiles of Iran have been modernized. Their reach used to be 2,000 kilometers. Their new reach is roughly 3,400 kilometers. When you apply that to the map, you can see that the new ballistic missiles of Iran can easily reach Stockholm, Berlin, Geneva, Zurich, Marseille, Lyon, etc., Rome, of course, as well. And technically, they could also reach Kyiv or Moscow. But, Russia and China are strategic allies of Iran. So the Russians are not going to be so afraid of that. We now have conflict between NATO and Russia, growing economic embargo between the United States and China. Russia may not necessarily attack Europe, but it may use its ally, Iran, to threaten Europe. And everybody's now focused on this, the enrichment of nuclear material by Iran, saying, yeah, Iran, for the last 5.5 years, we are saying 2-3 times a year, Iran is just 2, 3, 4 months away from having its first nuclear weapon. Every year we see that we hear that the U.S. military is saying that, the CIA is saying that, the U.S. Foreign minister is saying that. Every couple of months somebody's saying, oh yeah, Iran is just Iran doesn't have it yet, but they're just 6 weeks away from having their first nuclear weapon. So let's put it this way. Iran will have its first nuclear weapon by the end of this year. I remind people and investors, the nuclear weapon is not so much the issue. Those ballistic missiles are already available. They have already been produced. And they pose a threat to Europe, a threat that I believe people are not thinking of when they look at the situation in Ukraine. The situation in Ukraine calls for caution because the enemies of NATO could very well use Iran to threaten Europe from a flank they are not thinking of at the moment. This is actually a complex situation because we're increasing the embargo, the economic embargo on China. But let's not forget, China has become Iran's #1 economic patron or sponsor. So we now have China and Russia having an interest of using Iran to exercise pressure or threat against Europe.
Yeah, not only is Iran the largest trade partner of China, but China is increasingly doing a large amount of trade with many of these nations and has become, as we know, the factory for the world, producing large number of goods for all sorts of different countries. It also consumes a large number of goods as well from many different countries. So it's becoming a major trading partner to not just Iran, but also to all of these other countries all over the globe. So, they have a huge, huge influence when it comes to global trade. And again, if the US and China are in a long-term competition over trade and technology and all of these things, this is pushing some of those countries that need to have that ongoing relationship with China further into their sphere of influence. So longer term things that we're looking at and discussing here. But I think that's an important point that you made, is that the ballistic missiles that Iran has been able to develop, they have a reach of 3,400 kilometers. It's a little over 2,000 miles. So obviously they could very easily reach Israel, but they can also reach Europe now at this point.
Yes. We like to focus on Israel, thinking this is Israel's problem, but Iran did not develop this new arsenal of missiles for Israel because theirs already reached Israel. They developed that to be able to reach Europe in order to be able to exercise influence or power, to project power over Europe. So this is interesting. The risk premium over European assets is rising substantially in the last 4 years, but investors have not priced it in yet. I believe European assets are in for a correction, and that would benefit US assets, relatively speaking.
Last time we had you on, we had a very interesting conversation about geopolitical safe havens because when we think about some of the growing geopolitical risks that we see abroad, obviously we have a war that's still active in Ukraine. We have another war that is still active in Israel. And there's some expectation that Iran was going to retaliate. We haven't seen that yet. Not sure if they've decided they're not going to do that or not, but that could be still on the table. Things could escalate and get worse in the Middle East. And as you pointed out, Iran also has the ability to reach Europe, particularly Ukraine, if it wanted to aid Russia in its war efforts there. So there's a number of geopolitical risks, of course, that are out there. You assign various scenarios and probabilities to these different events. And because of these things, obviously, many people are aware of this, especially the rich, and they are constantly looking for ways to diversify their assets into geopolitically safe areas. New Zealand has been traditionally at the top of the map when you think about where rich are moving their assets or having second locations as just a plan B. But it appears that geopolitical safe havens are basically running out. And you had said Uruguay is now a key place and a key destination for many people. Do you mind, real quickly touching upon that for us?
Yes, I think that the world is in change, and all these changes are also being reflected, not surprisingly, on our global geopolitical safety country rankings. Not long ago, the legacy countries like Switzerland, Austria, New Zealand, Australia, Iceland topped the ranking of the most geopolitically safe nations. It's changed quite dramatically in the last 3 years. And now Uruguay is topping that chart, followed by Mauritius and then New Zealand. New Zealand itself has declared it wants to join the new US UK nuclear military alliance, which is called AUKUS, where Australia is already a member. This is changing. This is changing the geopolitical risk exposure of New Zealand quite substantially, because New Zealand wouldn't have been a target so far, but in the future, if it is part of AUKUS, New Zealand cannot be considered anymore in the top three of the geopolitically safe nations. So we have put Mauritius under review, and it's still number three, but it is likely that it will be downgraded before the end of the year. So that's interesting. Switzerland used to be among the top three for a long time. It no longer is among the top three. Not one single Western country is in the top three soon. And if we exclude New Zealand, no other Western countries in the top seven. Some countries are moving up. These are Singapore, Paraguay, Botswana, Ghana, etc. But these are not legacy countries. These are countries that are along the equator or in the south. And the problem that we have is this. To be a safe haven in a geopolitical terms, useful for the world's rich and for Western investors, the country has to be also not highly indebted. Because if a country is highly indebted, it also immediately becomes unstable politically. So the problem is the world's rich are running out of countries that are both geopolitically safe and at the same time financially, economically stable. Since many nations are highly indebted, that actually excludes them. Really a situation of emergency, you could say, or urgency for the world's rich. They are running out of safe havens in this world.
And again, you said that New Zealand has moved down on your ranking slightly, largely because of this AUKUS pact that was formed in 2021 between Australia, United Kingdom, and the United States, if I understand correctly, even though New Zealand is not part of the AUKUS.
The situation for New Zealand began to change when Australia became a full member of AUKUS and began to arm with nuclear submarines. That's underway currently. That was the first concern that rose for New Zealand. But now, over the last 6 months, New Zealand has expressed its desire to be closely associated with the AUKUS nuclear military alliance. It's not just a country nearby. They want a closer association with it.
So New Zealand is currently not part of AUKUS, but it has expressed a desire to closen its relationship with AUKUS. And obviously, New Zealand is part of the Five Eyes Alliance. So that includes Australia, United Kingdom, United States, and Canada, which is focused on intelligence cooperation, not so much military capability building, but AUKUS is more along the lines of military, deepening the defense ties between those three countries, with New Zealand expressing some support moving in that direction. Then that does make New Zealand slightly less of a geopolitical safe haven, if I got that correct.
Yes. This is actually, you could say, a sad development for New Zealand. We have liked New Zealand for many years. New Zealand was one of our permanent, countries on the list, on the top 10 for a long time. It's been a favorite. We have recommended New Zealand to many people in the past, but certain things have begun to shift in and around New Zealand over the past 4 or 5 years. As I mentioned, first was Australia's membership in AUKUS. Second, the deterioration of prices in New Zealand in terms of financial stability. Also, during COVID, a lot of people felt that New Zealand had taken measures during COVID that would not be considered, kind to personal freedoms. So that was, of course, not the main reason for us. But when New Zealand expressed its strong desire to be in close association with AUKUS, this has been a sea change for us. I personally felt New Zealand didn't have to do that. I felt New Zealand being part of the Five Eyes group, it's enough. And I think China has accepted that, never felt threatened by New Zealand. But if New Zealand becomes a member of AUKUS, I think it makes it very, very hard for us to recommend it, because it could be a direct potential target, first line in case of a war in the Pacific. This is a new development. Now, I would say earlier I mentioned 2 top criteria for a country to be in the top ranking of geopolitical safety: the geopolitical neutrality of the country. Second, its financial viability. It means it cannot be highly indebted. But third, it would be also its respect for personal freedoms and private property. This is an area where some Western countries or legacy nations are suffering lately. The area of the protection or the untouchability of property, private property, has suffered. Canada, for instance, used to be higher on our ranking, but when they decided to sanction some citizens, it is of course understandable the government had to do that, but the sanctity of private property and private financial assets is something that you want to have in such a ranking as well. So the Western countries are suffering really along the whole line, not just in geopolitical neutrality.
So, Christian, we've covered a lot of really interesting information, and there's so many different areas that I know that we could discuss. You have some thoughts that you've been writing on when it comes to Venezuela, also things that are happening between India, Pakistan, obviously events in the Southeast Asia, which you've also been covering. So I think what we'll have to do is have you back on a little bit later to discuss some of these things that we're seeing in these parts of the globe. But again, I do want to mention that you are writing and covering all of these various things on your website. So with that said, what would be the best way for our listeners to follow more of your excellent research?
Sorry, that's my dog welcoming my wife. That would be to visit geopoliticalresearch.com.
Perfect. And we'll have a link out to that where this interview is located on Financial Sense. And Christian, thank you for coming on and sharing your view with us. It's always a pleasure to speak with you, and we look forward to having you on in the future.
Thank you for having me.
So as Christian discussed in today's show, regardless of who wins, Trump or Harris, there are certain trends that will continue, including, very likely, an ongoing deterioration in U.S.-China relations and expanding fiscal deficits. This means higher debt loads and higher interest costs on the debt. As he noted, fiscal and monetary policy since the 1970s, after the severing of the gold window in 1971 under Nixon, has led to ever larger expansionary fiscal and monetary policies. We now see the adoption of modern monetary theory as the de facto policy here in the United States. As far as the challenges that Europe faces, he mentioned that there is a $9 trillion spending gap for both energy and military rebuilding in Europe over the next decade, which will have to be financed, he believes, through a potential tapping of citizens' savings or implementation of wealth taxes. When it comes to geopolitical risks, he highlighted that Iran's improved ballistic missile capabilities now pose a growing threat to Europe, since Iran is an ally with Russia, of course. New Zealand, which was once considered a major geopolitical safe haven for international capital, is now lowered on its ranking, with Uruguay taking the top marks. And lastly, there is a major global power shift that we've seen just in recent years, where the economic center of gravity has shifted back towards Asia, particularly China, and away from the West. And this is largely affecting global trade and the center of financial capital, with gold reflecting that as gold continually moves towards the BRIC nations, with China, India, Russia, and many of the other countries building massive gold reserves. If you have any questions or feedback on what we discussed today with Christian Takushi, feel free to send me an email at CRIS, that's Chris with no H, at financialsense.com. If you have any questions about our financial planning or asset management services, you can visit us at financialsensewealth.com or give us a call at 888-486-3939. For FS Insider, I'm Cris Sheridan. Thanks for listening.
The Financial Sense News Hour is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the News Hour each involve their own unique risk factors, which are not discussed on the show. Responses to listener inquiries are based on the personal opinions of the Financial Sense staff and do not take into account listener suitability, objectives, or risk tolerance. Financial Sense News Hour and its parent company shall not be liable for any financial losses that result from investing in any companies mentioned in Financial Sense or arising out of the use of any material on the News Hour. Be advised that you invest at your own risk.